Now, this is from the Emerging Trends in Real Estate survey. That is the source of this graph. And as you can see, the recommendation here is that on single family, the recommendation is to buy single family property. 52% of the properties you see you should buy. 34% of those you should hold, and only 13.3% of those should you consider selling. Look at moderate income apartments. 51% buy, 40% hold, and 81% sell. Okay? Moderate income apartments. This is duplex, triplex, fourplex. Okay? Now, high income apartments, you can see the buy rate on those is very low at 18%. Why? Because that market is very competitive. Wall Street has an insatiable appetite for multifamily communities. So we want to avoid those. We're going to stick in the single family quadrant and the duplex, triplex, fourplex quadrant, because you can see that represents the lowest risk and the most stable income opportunity in those classifications. If you buy anything else outside of that, you're putting yourself in a very high risk position, especially student housing or high income apartments. Now I just pulled out of this deal last week. I had 4 duplexes, so 8 units under contract for $1.3 million, $1.5 million for 4 duplexes, which is high. The reason I was willing to go higher is I had another 2 acres of land behind these 4plexes that came with it, so I could conceivably build another 4 duplexes. So instead of 8 units, I'd have 16. But as I dug deeper, the ecology department was not going to release new buildable land until 2026 on the remaining back parcel. So I couldn't build until 2026. That's 5 years. I can't wait that long to develop and increase value. But the other reason he had it priced so high is he was doing short-term furnished housing for traveling nurses, which is a great product. I mean, you can make a fortune doing that, and there are a myriad of websites, very much like Airbnb, that service the traveling nurses population. And they, on average, pay 150% of market rents, in some cases 200% of market rents, and that's what this guy's been doing for like the last 8 years, and he is killing it with the income. But I can't buy those things based on that income, because what happens if that market dries up? So we always analyze our deals based on the fair market value of a 12-month rental. If the numbers work at that price, then anything else on top of that is gravy. But you should never be buying something with a odd or unique classification as for how the rents come in to justify the purchase price. So when I added what market rents would make the property worth, we got a number of about $700,000. I can't pay $1.5 million. I can pay $700,000 to break even or cash flow on these 4 units if I'm renting them at market rates. So needless to say, I countered back to the owner and I said, I'll pay you $700,000 cash. I'll give you $900,000 with $200,000 down. You carry the $700,000 at 3%. And then I wrote him a full price offer at $1.5 million at 0% down, 0% interest on a 360-month term, which he didn't like. But it would have been great if he would have accepted it. That would have been a phenomenal deal. I probably could have wholesaled that to Michael, right, MJ?
Yeah, right, all day long.
Yeah.